Ladies and gentlemen, the Philippine National Anthem. Good morning. May I ask everyone to settle down as we will begin with the 2020 Annual Stockholders Meeting of Xurpas Inc. in a few minutes. Before we begin, I would like to introduce the following officers of Xurpas Inc. Nico Jose Esnoliedo, Chairman of the Board. Alexander D. Corpus, President, Chief Finance Officer, and Chief Information Officer. Fernando Jude F. Garcia, Director, Treasurer, and Chief Technology Officer of Xurpas. Mark S. Goriseta, Corporate Secretary, Chief Legal Officer, and Chief Compliance Officer. We would also like to acknowledge the presence of the following directors of Xurpas Inc. Wilfredo O. Racaza, Director. Mercedita Esnoliedo, Director. Jonathan Gerard A. Gurango, Independent Director. Imelda C. Tiongson, Independent Director, and Bartolome S. Silayan Jr., Independent Director. The agenda for today's meeting will be as follows. The President of Xurpas Inc., Mr. Alexander D. Corpus, will now preside.
Welcome to the 2020 Annual Stockholders Meeting of Xurpas Inc. We would like to thank everyone for attending this virtual meeting despite the challenges that each one of us is facing due to the coronavirus disease 2019. We hope that you are all safe and coping with the current situation. We wish to inform everyone that we will be recording this meeting. The recording of the meeting will be posted in the company's website. The minutes of the meeting will also be made available in the company's website within 7 days. This meeting is called to order. Mr. Corporate Secretary, have all the notices for this meeting been sent? Do you have a quorum for the transaction of business at today's stockholders meeting?
Mr. Chairman, notice of the time, date, mode of conduct, and purpose of this meeting was sent through a disclosure via the PSE Edge portal and was made available in the company's website on November 6, 2020. Furthermore, I certify that stockholders owning 57.45% of the total outstanding shares as of October 23, 2020 are present via remote communication or through proxy. Therefore, there is a quorum for the meeting.
Before moving to the first item in the agenda, I would like to request our Corporate Secretary, Attorney Mark S. Goriseta, to explain the rules of conduct and voting procedure to facilitate the orderly flow of our meeting.
The following is the procedure for discussion and voting. Questions and comments may be sent prior to or during the meeting at corpsec@xurpas.com and shall be limited to the items in the agenda. Questions or comments will be read aloud and addressed during the question and answer period, which shall take place after all matters for approval have been discussed. The company will only read questions and comments which are relevant to the agenda. Management will reply by electronic mail to questions and comments not taken up during the meeting. Each stockholder was given an opportunity to cast their votes by submitting their ballots via the online registration link circulated by the company. Stockholders may also participate in the voting by submitting a proxy. As disclosed in the company's definitive information statement, the deadline for the submission of the ballots and/or proxies was November 20, 2020 at 5 p.m. The company has already tabulated all votes last November 23, 2020. We assume that all participants of this meeting have already registered and submitted their votes or proxies when they registered online. Each outstanding share of stock entitles the registered stockholder to one vote. For the election of directors, stockholders may accumulate their votes, and the candidates receiving the highest votes will be declared elected. The affirmative vote of at least a majority of the issued and outstanding capital stock entitled to vote and represented during this meeting will be needed to approve each resolution. The voting process was also explained in our bylaws and the information statement circulated via PSE Edge portal and the company's website.
There being a quorum and having settled the guidelines for discussion and voting, we shall proceed with the first item in the agenda, which is the approval of the minutes of the stockholders meeting held on May 7, 2020.
Mr. Chairman, the number of stockholders present and the list of directors and officers who attended the previous stockholders meeting are flashed on your screen. Stockholders had the opportunity to email their questions and comments at corpsec@xurpas.com. Questions and comments were then read aloud and addressed during the question and answer period, which took place after all matters for approval had been discussed. Each stockholder was given an opportunity to cast their votes by submitting their ballots or proxy via the online registration link circulated by the company. In accordance with the filed definitive information statement of the company, the deadline for the submission of the ballots and/or proxies was last April 27, 2020. Consequently, the company tabulated all the votes last April 30, 2020. It is assumed that all participants of that meeting have registered and submitted their votes or proxies when they registered online. Each outstanding share of stock entitles the registered stockholder to one vote. For the election of independent directors, stockholders are allowed to accumulate their votes, and the candidates receiving the highest votes will be declared elected. The affirmative vote of at least a majority of the issued and outstanding capital stock entitled to vote and represented during the meeting will be needed to approve each resolution. The matters approved during the 2020 special stockholders meeting is currently flashed on your screen. The voting results is also flashed for reference. Mr. Chairman, copies of the minutes of the stockholders meeting held last May 7, 2020 have been uploaded in the company's website. The minutes of the meeting was also included in the definitive information statement, which was disclosed via PSE Edge portal and posted by the company's website.
The resolution for approval is flashed on the screen. May I now ask the Corporate Secretary to report the results of voting?
Stockholders holding at least 57.45% of the total outstanding shares of Xurpas, Inc. approved the minutes of the previous meeting. Given this, I hereby certify the stockholders' approval of the minutes of the meeting held on May 7, 2020.
The next item in the agenda is the message from the Chairman of the Board of Directors, Mr. Nico Jose Esnoliedo. The Chairman of the Board of Directors will now give his message.
Good morning, everyone. Just to start off, I think it's important to mention that, especially in the digital realm, the coronavirus pandemic has impacted individuals and businesses quite substantially this 2020. Pre-COVID, Filipinos were already, according to We Are Social, Hootsuite, and several third-party research groups, Filipinos were already regarded as the most active internet user in the world. we've actually become even much more engaged on the internet. As you're seeing a lot of people work from home and a lot of students study and do schoolwork from home as well. According to a recent Google Temasek and Bain and Company research report, the amount of hours spent per day in the Philippines spiked the highest versus our neighbors in Southeast Asia, going from 4 hours per day to 5.2 hours per day during the lockdowns. And even after that, still maintaining a steady 4.9 hours spent on the internet per day, which is quite substantial and is the highest in the region. You've seen COVID obviously impacted the global workforce quite substantially, where globally and as well as the Philippines, you're seeing massive damage to the livelihoods of people as they lose their jobs and their livelihood. However, a lot of individuals, Filipinos especially, have been very resilient, being able to find new means to generate income for themselves. And you're seeing a lot of Filipinos find new ways of generating income, from becoming YouTubers to Grab riders to e-commerce marketplace sellers. They're creating new ways of being able to generate income for themselves, which we believe is a mega trend that's already been happening pre-COVID, that has been accelerated by COVID, which is a mindset switch from people looking for job security to people instead looking for income security. And thus you see the rise of a new kind of worker, the gig economy worker. From a business side, a lot of shifts as well. A lot of businesses have been impacted quite negatively by COVID. Depending on the industry you're in, so for example, if you're in fast food, you've probably been substantially hit by COVID. Your business has suffered tremendously. This forces a lot of businesses to also shift what they're doing to the internet. They're shifting their businesses online. So you're seeing multiple groups, conglomerates across retail and several other categories do everything from fintech to e-commerce to some sort of digital transformation initiative. Consumers have largely responded. In the Philippines, during COVID, 37% of all digital users in the Philippines didn't use those services prior to COVID. So these are all new users flocking on to use fintech apps, payment gateways, e-commerce, digital shopping, buying groceries, and so on. This isn't true just for the Philippines. This is something that's been happening to the rest of the region as well. I guess the question though is, are the services of these established incumbents the ones being used, or are these services that are being used, are they being offered by a new cohort of players, of competitors? The answer probably sits in between, and the answers probably depends on what your service is. But this new normal has really pushed conglomerates and large businesses to continue to accelerate their pace of investment into digital services. They know that the opportunity is quite massive. In Southeast Asia, the Philippines is projected to have the most revenue growth versus all of our neighbors in the region when it comes to digital services. COVID has essentially driven a decade of tech growth in just 2 years. It's compressed things that were supposed to happen in 2030 to now. And depending on what region you're in, this acceleration has been very marked. This acceleration has been clearly has been emphasized. As a result, because of this sudden jarring switch and transformation and shift, we believe there's a substantial opportunity in building a not just a local but a truly global technology company today. So, in our last ASM last year, November of last year, we said that we would undergo a reorganization in Xurpas. The goal was really to balance more predictable revenues with upside growth opportunities, which is, I think, important for a technology company where there are certain expectations there. We aim to capture value with two legs of growth moving forward. On one hand, there's the enterprise business of Xurpas, where we do custom software development. We work with third-party partners to help them take advantage of what technology has to offer to build their business and to transform their business. At the same time, we announced an acquisition of a US company called Wavemaker. I'll talk a bit about that later, which does technology management, has a suite and a portfolio of technology companies under its roster, and has several investments in the technology space. So, talking first about the core assets of Xurpas. So under Xurpas Enterprise, we've seen our business jump up by 158% in third quarter 2020 versus third quarter 2019. Versus second quarter 2020, our third quarter was up 120%. Second quarter suffered a bit during the initial impact of the lockdowns. And we're starting to get businesses from overseas. So we've gotten an Australian company to outsource services to us, and 3 US companies via Wavemaker tap our enterprise unit to develop services. A caveat though, all figures exclude Yondu, which we had sold to Globe Telecom and is no longer a part of Xurpas. Altitude Games has taken a similar tack. Has a very enterprise approach now to games. Recently signed a contract with a group called Storms, which is the game publishing unit of Singtel, to develop game content for them. It signed a contract with the Sandbox, which is a very prominent blockchain virtual world, to create game content inside the Sandbox universe of the Sandbox. At the same time, we've signed a contract with a virtual gaming worlds, which is to create a casual game with a slot machine based mechanic for them. So a lot of meat and potatoes established revenues from big entertainment franchises looking for a talented team to be able to execute for them. Micro Benefits recently signed a contract with the Responsible Business Alliance, which is a very large global association of electronics and IT companies, to use Micro Benefits software tools for their members. The agreement gives Micro Benefits a guaranteed source of income from the association, plus at the same time, the collaboration that's created with the various members of RBA creates new opportunities for sales and revenue for Micro Benefits as well. Storm was impacted a bit this year because two of its biggest clients, one is a quick service restaurant group and one is a very large fast moving consumer goods company, struggled this year due to COVID and pushed their benefits back for a lot of their employees to next year. Thankfully though, a lot of our major clients have re-signed for 2021 and we're expecting a recovery for Storm moving forward there. We've also started to populate the top of our sales funnel using digital marketing efforts to create a very strong pipeline of leads for new clients, which we hope to close in the coming months. Storm also recently launched a partnership with a company overseas called Go Integro. They operate in 16 countries, mostly in Latin America and in Europe. They're an employee experience platform. So if you're an employee of a company, you get access to an app and a web interface where you can manage all your interactions with the company, from collaboration tools to payment tools to benefits. It will be Storm branded and will be implemented first quarter of next year. We're quite excited as we're their first partner in Asia for this. One of Storm's businesses, which it owns majority of, called All Care, has actually done quite well. The problem they're solving fits well into the trends that I had mentioned earlier, which is unlike employees who work in very large companies, this new gig economy worker class, these new income seekers, people who don't work for companies, their biggest problem is they receive no benefits because they're gig economy workers, they're freelancers, and this is the opportunity that is presented to All Care. So traction-wise, All Care has seen a more than 10x growth year on year. And I think what's amazing about that growth was they only started the year with just under 2 million pesos in their balance sheet. They didn't raise any new rounds of funding. There was no external debt that was raised, no shareholder advances, and they were still able to grow their business tenfold over that period of time. And as a result, they were recognized for their execution this year, and they were the grand winner in the recently concluded Asian CEO Awards for 2020 as the SME of the Year. And entering next year, Allcare has launched a bunch of other new membership products targeting new segments of these gig economy workers. So moving on to the Wavemaker deal, we announced this late last year that we had acquired a US firm called Wavemaker Partners US. So Wavemaker operates in the US. They have more than 230 investments globally. They have $210 million in assets under management, 25 people in their team, 3 funds with 1 sidecar fund. They've done quite well. They've been around since 2003, and they've been consistently in the top quartile of funds in North America who are in the same space. They're also part of the Draper Venture Network, which is started by a very prominent Silicon Valley investor named Tim Draper, who was an early stage investor in the likes of Twitter, Hotmail, Tesla, and so on. One of the partners of Wavemaker, Eric Manlulas, actually sits in the global board of directors of the Draper Venture Network. And you can see globally, the Draper Network has presence in all of the major continents, in all of the major technology hotspots. One of the opportunities we really see is for these global tech companies, the time from launch to IPO has more than doubled or tripled over the past 2 decades. Before, in 3 to 6 years, a tech startup in North America would IPO already. Today, 10, 12, some 15 years later, they still remain private. But that's really where most of the growth comes from. The compounded annual growth rate since 2013 for these private technology deals has been 89.4% compounded annual growth rate, which exceeds a lot of their public counterparts, tech or non-tech. The nice thing about the business model of Wavemaker is it's twofold. There's the meat and potatoes management fees, where 2% of all of the funds managed by Wavemaker is booked as revenue by Wavemaker. And so regardless of the performance of the portfolio quarter on quarter, those management fees come in. Should there be an exit, there's a 20% profit share that Wavemaker gets. So if they invested $100 in a company, it sells for $500, they get 20% of the $400 profit that they generate from that. The other synergy that we are unlocking already today with Wavemaker is that a lot of their investments sit in a very high-cost tech environment, which is North America. Xurpas, which has the experience of deploying both enterprise and consumer applications, is in a strong position to service them at a more affordable cost to them, but at a hands-up profit for us. So we already have 3 clients, 3 investee companies that have been outsourcing services to us, and we expect that to grow. At the same time, there are potential opportunities to bring some of those technologies to our region, to our part of the world. So those are opportunities that we're also exploring. Ultimately, it's really about a balance of having that steady Eddie meat and potatoes revenue generated by our enterprise business, as well as the management fees that come from the Wavemaker side. But at the same time, there's that upside of us being able to get that profit share or that carried interest from exits from the portfolio of Wavemaker, as well as unlocking new sources of value and income by bringing in some of those portfolio companies' technologies to our region. And being mindful of the new normal that's been created by COVID, this balancing act, this new two-legged, I guess, infrastructure that Xurpas is leveraging off, is a blend and a mix that we're looking to leverage off moving into 2021. Thank you.
The next item in the agenda is the annual report of the President. Please allow me to discuss. In 2019, Xurpas implemented organizational changes consistent with the strategy of focusing on recurring or predictable revenues for both the enterprise and consumer businesses. Likewise, Xurpas and its subsidiaries continued its cost-cutting measures throughout the year, which included closing companies and absorbing operations of some. To restructure its financial position, Yondu was sold in September 2019, which provided the funds for Xurpas to pay its bank creditors. And finally, the company started discussions with Wavemaker to add another leg to its business, with the added opportunity of providing outsourced software development and support for Wavemaker portfolio companies. All the aforementioned activities brings me now to the discussion of the 2019 financial performance. Xurpas ended with a 972 million revenue in 2019, which is a 22% drop in revenues from the 1.2 billion pesos in 2018. Please note that the sale of Yondu was in September 2019, which meant Xurpas only recorded its revenues up to that point. This led to a decrease in consolidated revenues. The sale, however, enabled Xurpas to settle its bank obligations and improve its liquidity. Analyzing further the 22% decrease in aggregate revenue. Enterprise business, a major portion of which was gone by the fourth quarter because of the sale of Yondu back to Globe, minimally decreased for total year. On the other hand, mobile consumer revenues decreased by 93%, as this segment has not recovered from the two industry reshaping events, namely VAS purge and ad frauds, experienced the previous year. Likewise, there was a minimal move in storm revenues. The resulting net loss of 2.6 billion is mainly due to the following: loss recognized from the sale of Yondu, amounting to 480 million pesos, and the impairment of investments amounting to 1.9 billion. A big portion of the impairment is from Art of Click, for which we recorded goodwill. It was unsuccessful in the pivots it attempted. AOC's operation was subsequently suspended to prevent further losses and required funds. At this point, I would like to discuss the company's financial performance for the first 3 quarters of 2020. Xurpas ended with a 113 million revenue in the first 9 months of 2020, which is an 88% drop in revenues from the 922 million posted for the same period in 2019, which of course still included Yondu. Excluding Yondu, the revenues in the first 9 months of 2019 was 139 million pesos, which dropped by 19% to 113 million pesos in the first 9 months of 2020. Thus far, the COVID-19 pandemic effects on the revenues was felt in the second quarter. Analyzing further the 88% decrease in revenue, this is mostly due to Yondu not being part of the group anymore. Thus, the decrease of 92% in the enterprise business. Business in the enterprise segment is still mainly custom software development, but staff augmentation is a growing business. We see a 53% decrease in the mobile consumer business, wherein the business left is digital marketing or digital rewards. We also see the storm business deteriorating by 47% for the period, mostly from the lower sale of goods. However, most revenues from this subsegment kick in the fourth quarter. Bright note here is the growth in revenues of its All Care subsidiary, which offers HMO and other pre-need employee benefits to small teams and freelancers. Even as the revenue drop is mostly explained by the fact that Yondu's revenues are not consolidated anymore in 2020, the revenues were also affected by the pandemic, as shown in the next slide. The effect of the pandemic was seen in the second quarter versus first quarter revenue comparison, which in aggregate decreased by 58%. But it is noteworthy to mention that across all the business segments, revenues recovered in the third quarter, which increased by 137% quarter on quarter. The pandemic affected the enterprise business as revenues decreased by 51% in the second quarter. But since then, revenues have recovered, growing by 120% in the third quarter. Exception here was the staff augmentation business, which grew quarter on quarter. Storm's revenues decreased by 74% in the second quarter, but increased by 117% in the third quarter. Likewise, the exception here is its all-care subsidiary, which grew consistently over the quarters. The net loss of 32 million is a 95% improvement from the 656 million loss of the previous year. The profitability figure have actually improved vis-a-vis second quarter because of the one-off other income from a collection of a receivable already provided for, and an improvement in the operating results. In 2020, Xurpas moves forward with two main strategic initiatives. Number one, increase revenue and earnings through organic growth and Wavemaker. Xurpas will take advantage of opportunities brought about by the increasing recognition of the importance of digital transformation, both by private companies and the government. Xurpas shall continue its cost-cutting measures. Finally, Xurpas will maximize its synergies with Wavemaker and its one, financial stability upside, and two, the custom software development business opportunities with Wavemaker's network. The second component of our strategic initiatives is an equity restructuring. We shall apply with the SEC using the additional paid-in capital to reduce the retained earnings deficit of the Xurpas parent company. This will improve the company's financial profile and optimize its performance moving forward. That ends my presentation. Thank you. We will now discuss the corporation's dividend policy. Considering the corporation's financial performance, the corporation cannot provide assurance on when it will pay dividends. In making a decision to declare dividends, the board may consider various factors, including the corporation's cash, gearing, return on equity and retained earnings, the results of the operations, or the corporation's financial condition at the end of the year, and such other factors as the board may deem appropriate. The corporation's board may at any time modify such dividend payout ratio depending on the results of operations and future projects and plans of the corporation. However, management is doing its best to improve the corporation's financial performance to be able to increase shareholder value and accordingly declare dividends. The company has amended its related party transactions policy in 2019 to comply with SEC Memorandum Circular No. 10, Series of 2019. The group, in the normal course of business, has transactions with related parties such as service and licensing agreements, always at arm's length and taking into consideration the best interests of the corporation. All related party transactions are made at terms and prices agreed upon by the parties. Flashed on your screen are some of the related party transactions for 2019. A detailed discussion of all other related party transactions entered into can be found in the corporation's 2019 audited financial statements. Given the need to operate in a sustainable manner, the company is starting to become aware of possible ways it can contribute, which will have economic, environmental, and social impacts. The material topics included in the report are limited to the operational matters, which have direct and significant effects in relation to the company's sustainability and the interests of its identified stakeholders, which includes shareholders, employees, customers, and suppliers. As an information technology company, we identify that our main contribution to sustainability is providing digital transformation with our technical capabilities. It is worth noting that as an IT company, the effects of its operations mainly affect the economic and social aspects of sustainability. The company's sustainability report was attached to the company's annual report and can be accessed through PSE Edge or the company website. The resolution for approval is flashed on the screen. May I now ask the Corporate Secretary to report the results of the voting.
Stockholders holding at least 57.45% of the total outstanding shares of Xurpas Inc. approved the annual report and 2019 audited financial statements. Given this, I hereby certify the stockholders' approval on the annual report and the 2019 audited financial statements.
The next item in the agenda is the election of the members of the Board of Directors and independent directors for the ensuing year. Our Corporate Secretary will explain the nomination process.
The company's nomination committee pre-screened and accepted the nominations for the following directors: Nico Jose S. Noliedo, Alexander D. Corpus, Fernando Jude F. Garcia, Wilfredo O. Racaza, Attorney Mercedita S. Noliedo, Jonathan Gerard A. Gorango, Independent, Imelda C. Chongson, Independent, and Bartolome S. Silayan Jr., Independent. All nominees possessed all the qualifications and none of the disqualifications under the corporation's bylaws and manual on corporate governance, and are eligible to be nominated and elected as directors of the corporation. The qualifications of the directors and independent directors are also provided in the information statement, which was disclosed through the PSE Edge portal and posted on the company's website. The qualifications of the nominees are also flashed on the screen for your reference. For directors' compensation, directors receive a standard per diem of 20,000 pesos for every meeting attended, while the chairman is entitled to a per diem of 25,000 pesos for every meeting. Non-executive directors have no compensation aside from their per diem, while directors who hold executive positions receive compensation in addition to their per diem. Flashed on the screen is the attendance of all of the nominated directors for all the meetings held in 2019. Kindly note the following. Mr. Raymond Gerard S. Racaza resigned as director effective January 30, 2019. Mr. Alexander D. Corpus was appointed as director effective February 1, 2019. Mr. Alvin D. Lau resigned as a director on May 23, 2019. And Ms. Imelda C. Chongson and Mr. Bartolome S. Silayan Jr., independent directors, were appointed on May 7, 2020.
The resolution for approval is flashed on the screen. May I now ask the Corporate Secretary to report the results of the election.
Based on the tabulation of votes, each of the 8 nominees has garnered at least 57.45% votes from the total issued and outstanding shares of the company. Given this, I hereby certify that each nominee has received enough votes for election to the board.
Thank you. The election of the directors for the ensuing year has been approved. On behalf of the elected directors, I thank you for your continued trust and support. Moving on, the next item in the agenda is the appointment of the corporation's external auditor. The audit committee has evaluated the performance of the corporation's current external auditor, CCIP Gores Velayo and Company, which has been the corporation's external auditor since 2008. Since 2017, the audit partner for the group is Mr. Dolmar C. Montañez. Based on the recommendations of the audit committee, the board has agreed to endorse the appointment of CCIP Gores Velayo and Company, or SGV, as the external auditor of the corporation for the current fiscal year for an audit fee of 2.3 million. Representatives of SGV are also present in this meeting should there be any questions from the stockholders. The resolution for approval is flashed on the screen. May I now ask the corporate secretary to report the results of the voting.
Stockholders holding at least 57.45% of the total outstanding shares of Xurpas Inc. approved the appointment of CCIP Gores Velayo and Company as the external auditor of the corporation for the current fiscal year for an estimated audit fee of 2,343,000. Given this, I hereby certify the stockholders' approval on the appointment of CCIP Gores Velayo and Company as the external auditor of the corporation for the current fiscal year.
The next item in the agenda is the ratification of all previous acts of the board and management for calendar year 2019 up to October 29, 2020. These are attached in the information statement disclosed in the PSE Edge portal and posted on the company's website. All items approved by the board for this period are flashed on the screen for your reference. The resolution for approval is flashed on the screen. May I now ask the corporate secretary to report the results of the voting.
Stockholders holding at least 57.45% of the total outstanding shares of Xurpas Inc. ratified all previous acts of the board and management for calendar year 2019 up to October 29, 2020. Given this, I hereby certify the stockholders' ratification of all previous acts of the board and management for calendar year 2019 up to October 29, 2020.
We will now proceed to answer questions raised by stockholders. The company will only read the questions and comments which are relevant to the agenda. Management will reply by email to questions and comments not taken up during the meeting.
Okay, we received a few questions from shareholders through corsec@xurpas.com. Let's proceed with the first question. When will the Wavemaker deal be completed? I will let the president of Xurpas, Mr. Alexander Xurpas, answer this question. Sir?
Well, since we are still in discussions with PSE and SEC on regulatory compliances, the company aims to finish the transaction by March 31, 2021. We will still need stockholders' approval to purchase Wavemaker Group Inc. to finish the transaction, and that will be part of the agenda in the next stockholders meeting.
Thank you, Mr. Xurpas. Now we proceed with the second question. Will the share price improve with Wavemaker's acquisition? Mr. Noliedo, could you kindly respond to this question, sir?
Sure. Well, similar to other publicly listed companies, we don't really have control over the share price of X. The only thing we really have control over is being able to focus in improving the company's performance, and being able to execute our plans. The Wavemaker acquisition provides a lot of synergies for our core business. For example, we're already starting to work with a number of their portfolio companies to do a lot of their enterprise services, which they've outsourced to us, technology services. That allows us to extend the reach of our core business, which is enterprise development, outside the market, outside the Philippine market, I mean. Ultimately, this expands our core business model. At the same time, the management fees coming from Wavemaker's portfolio will contribute to our performance, and carried interest as well, if there's any, from the exits of its portfolio companies.
Thank you, Mr. Noliedo. Since we have limited time, we will be reading the last question. All other questions will be answered by management through email. The last question sent by the shareholder is, why is Xurpas shares suspended from trading? Mr. Noliedo, hope you can take this question, please.
Yeah, I understand that this is a question of a lot of shareholders. The company shares were suspended when we announced the transaction involving Wavemaker. Since then, the company has been working together very closely with the regulators, making sure that our disclosures are complete, transparent, and accurate, to ensure that the public is properly informed of the transaction. We've been exerting all efforts to make sure that this is done expeditiously, and that the regulators are satisfied with our disclosures and with our compliance. Our understanding is that once these regulatory compliances are resolved, the exchange will already consider lifting our trading suspension.
Thank you very much, Mr. Noliedo.
There being no other matters to discuss, the 2020 Annual Stockholders Meeting is hereby adjourned. We thank you again for making time to attend the Stockholders Meeting of Xurpas Inc.
This concludes our meeting. Stockholders who have additional questions may send an email to corsec@xurpas.com. Thank you for attending the 2020 Annual Stockholders Meeting of Xurpas.